Yo, what is up, guys? It's Hunter here, coming back at you with another valuable video. In this video, I'm going to be talking about start to finish. I'm talking about top down all the way to entry, okay? Where you can have a guide, okay? And the reason why I'm saying this is guys, is trading is very simple, okay? It's a set of rules that you follow, a setup that you follow every day. You know, when you come to the chart, you're looking for one thing. If it's one setup, two setups, max, and that's what you follow, okay? And you put discipline behind that and execute that, okay? That's one or two things is going to happen. You're going to lose or you're going to win, okay? The losses need to be managed, and the reward needs to be more than what you're risking, okay? And then as you see that compound, you're going to make money, okay? So before we get started, like and subscribe. Go over there and check us out on Instagram. Go follow us there. Go ask me some questions. Go drop me some charts. I'll grade them. Go join our Telegram. I just dropped some charts in there. Go study, copy them, whatever you want to do. There'll be more to come. Okay, let's dive deep. This is going to be a deep session. Okay, this is going to be a really good one. Really pay attention. Get your note, your pen and your pad out, and let's get deep. Okay, so you can see here SCPX. You guys know that I like SPX. Okay, so now what I want you to know is we're on the daily. Okay, you can see that we moved down. Okay, let's just say we started right here. We were right here on this day. Okay, what I'm going to do is I'm going to go back 20. And before I get started, I want to tell you this, guys. I've had great mentors in my life. ICT, a guy that was taught by Steve Morrow that taught me market maker and things like that. I give my hat off to those guys, all the praise of those guys. I wouldn't be where I am today if it wasn't for them, for their knowledge and their ability to come on here and really preach about, the right stuff about the market. So hats off to you guys. But you can see right here, what I would do is I would go back 20 days, okay? And I would see what was relevant. So you can see in 20 days that high and this low right here is relevant, okay? And I would go back 40 days. What's relevant in 40 days? That low with the order block, that low, okay? Well, I go back 60 days. What's relevant? That high, and that's it. That's all I care about. I don't care about all this stuff. Why? You know what I mean? Like, I'm an intraday trader. So what I would do is mark out the high, mark out that low, mark out this low, okay? And then we're here, right? So I'm gonna redefine that nice bearish candle down. So what I would do is I'd mark out this right here. You can see that that's an imbalance with the order block. Okay, because it hasn't been fully mitigated yet. I'm trying to get this straight. Right there. Okay. And then what I'll do is I drop down. Okay. Fix this. See that is an order block, imbalance with an order block below right here. You can see that we're there. Remember, we're here right now. Okay. So you can see that as we work down, what we take out that low. And then in my mind, I'm like, if we're here, I really do believe that we would sweep this low too as well if we're bearish. You can see that we've broken down, we're making lower highs, we broke structure. Okay, we broke this low and we started moving down. Okay, so we're bearish, you know that. Guys, if you want to throw the EMAs on, throw the EMAs on so they can help you guide. They are a good guide to help you say, okay, if I'm under them, I'm selling. If I'm above them, I'm buying. Right? So you can see here as we moved up and come back, we mitigated this. Okay. We didn't hit threshold of this order block, but we did feel this imbalance. And we did sweep this low and react, right? At what? That threshold. So I knew as we leave, we left what? Imbalance, imbalance, imbalance. Okay. So what I'm going to do is I'm going to get inside of here and I'm going to see where my points of interest are on the lower time frame. Okay. What it can potentially go back to, order block, whatever. Okay. For a good pullback into another continuation drop to get to this point of interest. Because I know that in your mind, when you're bearish and you mark out these zones, this market, this area, this imbalance, these order blocks are magnets. It's money below, right? Or atom. Okay, so there's money here. At this low, there's money. At these highs that you see getting taken out and swept, these lows, there's money. Okay, this market is all about liquidity and points of interest. That's it. This market moves off strictly based off money, right? There was $10 billion up here and 20 here. Which way you think they're going to go first, right? I'm just making an example. Okay, so then I would go down to my lower time frame and I would mark out if I'm here. We just had this drop, right? And I'm looking for a point of interest here. Okay. Let me go back to the 4 hour and see it really map out. Okay. You can see that we have this last bearish candle here, and we have it, and it was fully a full imbalance, right? As that last candle closed right here, we can mark that as imbalance. You can see that it filled completely all of it, right? I would be still worried about this little tiny one here, but not so much as that one. But you can see off of this push down from this high all the way here, we did have, I'm sorry, let's go even further on that low. From this high to that low, we did have that's equilibrium. So, okay. So this imbalance that's right above equilibrium, this is the one that I would target. Okay. So that right there was a good point of interest. I will remember, we're not, and don't get me wrong, I'm not disregarding this imbalance that's right above neither. That little tiny one. Okay. This one here. I'm not disregarding that. Okay. I know when I get inside my day and how it reacts. Like, I don't try to predict the market. I'm not going to predict it come all the way up here and then try to sell. I'm not going to set limit orders and say, oh, it hits there, cool, it hits it. No, I react to the market. So based on what it tells me inside this day or that day, I'm going to react to it. Okay. So then what do we have? We know our top down. We know what we're chasing. We know our direction. We've marked out our points of interest. Okay. Now we've marked out, let's just go, we marked out some order blocks. Okay. Because this low down here is, you can see that we reacted to the threshold of that one order block that I showed you here. Look how it acted at the half point of that order block here. You can see. Okay. But we end up sweeping that low, which I pretty much sure of that we were going to do, right, to get back into here, because this has not been mitigated. It's hadn't been touched, right? And you got this smaller block here. So I know what we're chasing, okay? So my objective, my job is to figure out what the trade setup is going to look like, okay? So then I go lower. I go to the hour time frame, cool, boom. I've marked out points of interest. If we come back into here, okay, cool. You can see here, I don't trade consolidation. I'm not saying that we couldn't carve out trades in here. I have talked about these, but you can see here that we were in consolidation and stuff like that. I did mark out this last bullish candle right here, because it did have a tiny imbalance as it dropped, and a volume imbalance, which I love. Okay. And you can see this last bullish candle, but I didn't really consider this as an order block because it didn't really have a volume imbalance or an imbalance with it. I like to have an imbalance with the order block. So I had that marked out, but I'm still mapping out what my inside of my day is going to be. Okay. So I know the reason why I'm pinpointing on this day is because I took this trade. Okay. Now, and I'm just showing you everything that I've done. Okay. So we could have taken some trades here. I did take this trade. Okay. Based on what? It was a risky trade because we should have had a deeper retracement, which we did. Okay. Risky trade. But at the end of the day, what did we do? We took out Asian liquidity. Oh yeah, I forgot to do that. Hang on. Pow. Okay, let's go. Took out Asian liquidity, London high. Okay, boom, pull back in. Points of interest on the lower time frame, I sold, and I took out this low. Okay, but I want you to pay attention to this one, because this one was a perfect. If you were to, like I said, draw from fibs to low, that was a retracement past equilibrium. We got into a premium. Great. Okay. Then I start to mark out. If I'm inside this day, I want to mark out liquidity areas. Same thing I would do every day, though. Okay. I mark out my liquidity areas every day, even your yesterday's high. Okay. So you can see that this green line, when this was playing out, that was an area of interest. So I really don't have to draw a line. I will. Wow. There we go. Okay, cool. So I marked that out. I was like, okay, I got a high, I got a low, and I'm inside this range. Okay, when I came to the market, I was like, okay, London made a high. We come up, we snapped at that high, and we pulled in really quickly. Okay, you can see what time it is. What time is it? It's 15:30. That's 7:30 my time. Okay, that was a news event. Okay, you can see how we drove down, and then we sent price up. Okay, now you can see here once we drove, okay, once we drove. Hang on a minute. Yes. Okay. Okay. I'm sorry. I was lost for a minute because I thought that was equity. It's not. So 7:30, you can see that we drove down and then we ran up. Okay. When I seen that, I was like, okay, cool. I already know my points of interest, know my direction. I'm looking for a sell. I'm waiting for liquidity to be grabbed. Let's go. Okay. You can see what happened. Bam. I'm on the 15-minute. We grab liquidity. We pull back in. I'm like, cool. Okay. What am I? If I'm bearish and I've already grabbed, now let me see how this trade is going to play out. Okay. So now what's happened? Top down, direction, points of interest. We took in liquidity. We marked out our order blocks, imbalances, everything. Okay. Now what's it? We need to know timing. Timing's everything, guys. Where am I at? I'm in New York session. Perfect. Okay. New York session. Okay. Now, inside of here at 16:30, I want to take a trade after equity on the indices. Okay. So I want to see how equity manipulates and stuff like that. And then I will make my decision. Okay. And I'll show you that. News, need to map out. When is news going to happen? Let news play. Let news be a footprint to you. Okay. 90% of the time, equity and news are going to run the wrong way. They're going to induce people to do something they're not going to do. Okay. And then they're going to run the real direction. Okay. So you can see here. Now I will look for my setup. Is this my setup? I have a shark fin. Bam. I have accumulation. Okay. Manipulation. Distribution. I have grabbed liquidity. And now I am bearish. Now I want to chase and trade towards the money where they're going to grab again, which is sell side liquidity. Okay. Now let's break down to the lower time frame. And always pay attention to this. Okay. You see this candle right here? Right here, you can see that this right here, we had on this day, we had, I think it was 8:45 news. Okay. It was news right after equity. So I was waiting for that. Okay. You can see that 8:45, it says 16:45 down at the bottom. Look at that candle. Okay. So I want you to pay attention. I'm going to the 1 minute and I'm going to break this down. Okay. So you can see here, check this out. You can see here, they created a high. And you can see that they grabbed yesterday's high. Okay. Pulled back in. Now look, when news came out, 16:45, look what we start doing, pumping, 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 getting people to buy. They grab some more liquidity. Now I want you to pay attention to this pattern. Left leg, neck. We swipe liquidity again, and we pull in and we break structure. Okay? We break that neckline. And then we pull back because this leg here is displacement, guys. We grab liquidity. We get people chasing something that we're not going to do. That was news. Let's get them to chase, run the opposite way. Okay. Then look, we leave. I want you to really see that. You can see right here, there's a little bitty tiny volume imbalance right here where it just jumped, the price jumped. And that needs to be filled, guys. That's a footprint. Okay. I know that you see this right here up here that could have um, been a point of interest to grab and you would have never been filled. But the thing of it is, guys, when your displacement leg closes with a body, more than likely you're not going to see a deep retracement into that displacement. Okay. Maybe sometimes when it wicks the neck, pulls back into a good displacement, it'll do a deeper retracement. We closed below good, broke structure good. And you can see here that we pulled at that volume imbalance and we reacted. Pam, 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 pam. And I'll go grab my tool and our entry was there, stop loss above the high. And you can see, I just want to go here and you can see right there, you go back to the 5 minute. Let me go to 15. Okay, so right here, right there was the entry. What I would have done, I'll just redo it. Entry right there, stop loss above the high, target those lows. Okay, that's a 4R right there. Trade, instant profit, no drawdown. Now, guys, the objective is, okay, is here. I want you to pay attention to this. The objective is here. Okay, not every time you're going to have a straightaway run like that. Not every time. It's going to pull back, drop, pull back, drop. Okay, that sometimes you want it to do that so you can get extra positions. Okay, so you can see here that we had a straightaway drop. The objective for this move was to hit this low. Okay, you know everything. You got everything down. You're in the trade. You're going. Okay, and I'm just talking about other days when you see this. Okay, the other part of this is you want to be paying attention to when we have a swing and we're working our way to this low, right? Inside of that movement, working our way towards going after the objective liquidity, when we have pullbacks, minor pullbacks, okay? You go here, minor pullbacks like this high to this low, let's just say, if we had, okay, if we were able, and we had a significant drop, and I end up pulling back into a premium price with, and guys, it happens like this, and I had a shark fin, and I had a point of interest inside of this premium, balance order block, I'm going to snipe her again because I haven't made it past my objective. Once I hit this, I'm done. But when I'm working my way towards it and it gives me another opportunity, what? I'm going to grab it. Okay? But at the end of the day, that's good sauce. I want y'all to pay attention to this pattern because they're everywhere. Okay? GU today. I understand it is a little bit tricky. I wanted to take out London High, but I'll tell you why I really didn't have to. You can see this order block here. Okay. The reason why I picked this order block is because look, it has an imbalance. You can see that we accumulated manipulation, distribution. Okay. On G today. So you can see here, I was on the 5. And the only reason why I'm showing this is because it's the same pattern. Right there. 5 minute sharp. You see it? Our direction's down. You can go on GU, you can look. Go on the daily, we're moving down. Okay. Look at the woman. Okay. I want you to pay attention to this pattern. Okay. They're not going to be pretty all the time, but I'm just saying in general. You can see here, and it was in what? New York. Okay. You can see, and we were good. My point of interest, all of my liquidity was perfect. Okay. You can see that this leg swept the high. Okay. You need to wait for the displacement. You see, you want the displacement to be a strong move down. Okay. It moved down, it broke structure, and what did it leave? There, a footprint. Look at that footprint. Guys, I'm telling you. Footprint. I would have put my stop loss right there just to be safe and look at the trade. Okay. And I would have targeted, which I did. I would have targeted that low. Okay. Simple. This pattern is simple. I call it a 90% pattern. ICT calls it turtle soup. The reason why I call it 90% is because it works 90% of the time. Left leg. The right leg takes out the left leg, which is a liquidity sweep. You pull back in, break structure with displacement. Remember displacement. You want a strong, fast move down that leaves footprints inside that displacement, which is order blocks or fair value gaps. Return, entry. See you. Hardly no drawdown. Okay. Now, all of the things that I just taught you go hand in hand with finding this pattern. You'll find them everywhere, but look from a bird's eye view, like 30,000 feet above. Do that first, then break down again. Because most of the time you're going to snipe them down. You're going to get it. Okay. So number one, top down and direction. Know that first. Number two, points of interest, liquidity, order blocks, and balances in the higher time frame. Know where your points of interest are that it can potentially go to. And even on that trade, guys, this trade is a power of three trade. Okay. Accumulation, manipulation, distribution. That is a market maker sell model. Okay. Can't stress this enough. Timing. You're either going to trade in this 3-hour box, this 3-hour box. That's what I tell my students. Anything else, don't trade. I don't care. Okay. Always know if you're coming up on equity or you're coming up on a news event. Always know, because that right there could be the catalyst of you getting sniped out all the time, getting stalked out all the time, and then it goes your favor. Okay, let that happen. Let them grab, let them do what they're going to do, set the trade up for you, and go. Then you're set up. Then I showed you the entry. Plain and simple. Okay. I hope you got value out of that. That was sauce. It was really quick. It's really simple. Like I said, don't overcomplicate it. Look for those and study them. Back test them. Get familiar with it. Do flashcards. And let's rock out. Don't forget to like and subscribe. Go talk to me on Instagram. Go join our Telegram. With that, guys, hope you got value out of that. I'll see you on the next one. Keep pipping and dipping. Peace.